Good afternoon, everyone. I hope you're all doing well today, and thank you for joining today's webinar session. So what I'm going to do is, whilst we let a few more people join the session and enter the lobby, I'm just going to run us through some of the housekeeping rules for today. So this session is being recorded, and this is so that those who are unable to attend today's session will be able to watch it for the first time, but also those of you who are on the call today, if you're making any notes or want to reflect on some of the points discussed, you'll be able to watch the recording via YouTube, a YouTube link that we'll send over. We'll make sure that you get this within 24 to 48 hours. As well as this, so it's a discussion panel session with our guests, and what I'll do is I'll pass over to them shortly. If you have any questions, please do use the chat or question and answers function. If you want to ask a question and you want to ask it anonymously, I'll also put my email into the chat so you can send me an email and I'll raise it on your behalf today. So thank you once again for joining. We'll also send a transcript of those questions and answers back alongside the notes and the recording of the session as well, so you'll have full insight of that. But for now, I'm going to pass over to Sunil to introduce himself and then the rest of their team.
Great. Okay, thanks, Fraser. And good afternoon, everyone. And thanks for joining us on our webinar today. So we're going to be really looking at employment tax issues and their implications for the care sector. I'm sure you'll agree that's been particularly relevant given the recent rises in national insurance and national living wage. So just to introduce myself, so my name is Sunil Gupta. I'm one of the partners at RSM, and I lead our firm's private healthcare team. Delighted today, I'm joined by two of our experts from RSM. We've got Andrew Timpson, who's head of our employment tax team at RSM, and Charlie Barnes, who's a director in our employment legal solutions team. So delighted that we're working again with Care England. I think this is now probably our 5th seminar we're doing with them, so really appreciate sort of the ongoing collaboration that we have with them. I'm sure you'll all agree that the impact of the increase in national insurance and national living wage has been really a big issue and has caused a lot of debate in the sector. I think you'll all agree that I think it's quite disappointing to see that the proposed amendments that were put forward to exempt certain care sector businesses from some of these increases was actually defeated. So I think, we are where we are, and I think it's now generally accepted that these changes are here to stay. But what we really want to talk about today is really trying to understand a little bit better what we think the actual impact is going to be on the sector. But we also wanted to look at, how can businesses actually mitigate some of these implications? I think our view is very much that, these changes coming into effect literally from the beginning of this week, they're going to result in some challenges, but we don't think it's all doom and gloom, and we think some of the impact can be managed. So I'm delighted, as I said, to introduce our experts from RSM who are going to discuss some of these issues. So before I sort of go on to sort of Q&As with them, I'm just going to ask them to briefly introduce themselves. So maybe start off with Andrew first.
Thank you, Sunil. Good afternoon, everybody. Andrew Timpson, as Sunil said, I lead the employment tax team here at RSM, focusing much on cost reduction and compliance, with that focus on cost reduction to really optimize the right remuneration structures for organisations to take effect of the tax and NIC-free items, as well as the likes of salary sacrifice, etc. And we'll come on some of those later on today. But yeah, good to be here. Charlie?
Thanks, Andrew. Yeah, so I'm Charlie. I'm a director in the employment legal team. So, and my areas of specialism are fair work and pay, so picking up on national minimum wage, holiday pay, issues like that, but also then workforce structuring. So working alongside Andrew in relation to the structures of organisations' workforces and how cost efficiencies can be achieved, but also just setting them up from a compliant perspective to achieve the operational aims of the organisation. Good to be here.
Great, thanks, Charlie. So we've had a number of questions that were submitted beforehand. So thank you for submitting those. So what I want to do is really sort of cover some of the themes that these questions were really getting at. But before I actually go through and talk about some of those questions, Andrew, can I just ask you maybe just to give a very high level summary of actually what the changes in national insurance and national living wage actually were, and when they came into effect?
Absolutely. I think Charlie and I can double head this one. It'll be good. So the Chancellor back in the autumn budget announced that there was going to be a rise in employer NIC from 13.8% to 15%. That has taken effect from this month for all pay periods from April. The secondary threshold for NIC, which is the employer threshold, that has reduced from £9,100 to £5,000 again from April for all pay periods. That was announced within the budget at the same time. Very unexpected, very shocking. Again, we can come on to that. House of Lords, Sunil mentioned, they prepared a very, very comprehensive case for certain employers to be excluded from the employer rise. Most notably, health and care providers, charities with annual revenues of less than £1 million, transport providers for children with SEN and disabilities, and the low earning or low employee population organisations. Sunil just mentioned it was a rejection from the House of Commons. And there were 21 separate amendments, all of them got rejected. So that 15% rise and the £5,000 threshold will impact all employers from this month. What has been a positive is the employment allowance has increased from April. So it's gone up to £10,500. It was £5,000. And with the increase, the Chancellor also announced that they would remove the £100,000 NIC criteria, which meant that now all employers will benefit from the £10,500 allowance. Again, starting this month. There is no change to employer NIC exemption for employees under the age of 21. And there's also no change to the employer NIC exemption for all employees under the age of 25 who are employed on approved apprenticeship contracts. Now, I trust some of those are being taken advantage of, and if not, we can cover that off later on in questions if you have some. Charlie, do you want to cover the minimum wage position and any employment rights bill adjustments that look at costings?
Yeah, thanks, Andrew. So, I mean, on the national minimum wage rates, I mean, these were baked in probably from about October last year when they were recommended by the Low Pay Commission and then approved by the government back then. So we knew then what they were going to be, and they're effective from the 1st of April this year. And ultimately, we're now at a national living wage rate of £12.21. So that's anyone who's aged 21 and over, which is about a 6.7% increase from last year. But I think the real sort of the statistic that's probably, when you look at also the changes around the NIC thresholds as well, is the rates for the younger working population. So 18 to 20 year olds is now up to £10 an hour. So that's a 16.3% increase. And then if you look at your 16 to 17 year olds, that's now up to £7.55 and an 18% increase. And I think we'll kind of look at some of the sort of reasons as to why that is having a sort of like doubled with the NIC changes and the reduction of the threshold. That is sort of having a bit more of an impact on the labour costs of a younger working population. But ultimately, I mean, I suppose we knew where this was going, but I think the jump for the younger working population is probably a little bit of a surprise, but it does seem to be the direction of travel as to what the government's intentions are there. And then just picking up a point you just mentioned, Andrew, which we'll probably discuss in a bit further detail, is obviously just in terms of focusing on the cost of labour. It's important to point out, obviously, we've got the Employment Rights Bill, which is sort of navigating its way through the Houses of Parliament, and we're kind of like at the halfway stage now. But that is also something to factor into the cost of labour going forward because of the impact of some of those changes, and probably within healthcare, the impact of the changes around the use of flexible workers, so casual working, and we'll look at that in a bit more detail.
Great, thanks. So sounds like all in all, the overall direction of travel is an increase in labour costs, particularly for given the type of people that are employed in the care sector. So I think looking at the questions I've asked, I think there's an underlying theme across near enough every question that we've had so far, which is, what can organisations actually do to try to mitigate some of these costs, both in terms of national insurance and also national living wage. So, Andrew, any ideas of what organisations could or should be thinking about?
Yeah, absolutely. So there are mechanisms or expense items that organisations can utilise to change employer remuneration structures. They can provide great value at low or no NIC cost pressures. Some are more common. We'll talk about salary sacrifice, and there are some common salary sacrifice items, there are some not so common, and we'll pick up on those. But there are also some expense items which can meet the cost of everyday items for employees, which helps stretch their net pay. And it's the stretching of their net pay that gives them some value. So salary sacrifice, there are four main salary sacrifice areas or arrangements that HMRC consider approved from a tax and national insurance perspective, the golden four. Pension contributions is absolutely up there. That is the most common. I'm hoping most, if not all, are benefiting from pension salary sacrifice in some way. But most organisations, they're not 100% allocated when it comes to their pension salary sacrifice, and that's for many different reasons. But what I would say is, wherever you are in your cycle, either implementing for the first time or being a long-standing advocate of its inclusion, is revisit it. Revisit it to remind employees of the benefit. Revisit it to make sure it's being optimized to the fullest. Do we have up-to-date communications that mean employees may seek to increase their contributions? These can all have an impact, even for the most long-standing salary sacrifice items. Life assurance, which is a least common when it looks for salary sacrifice, very high on the benefit scale when it comes to provision, but for salary sacrifice it seems to be left off. And it's where it's linked to a registered pension scheme, it can be included as an allowable salary sacrifice with no tax adverse implications. Huge benefit for employees and their next of kin, etc. But something to consider when you're looking at extensions of salary sacrifice. Cycle to work arrangements, again, not uncommon, but normally for a small cohort of employees. Since the restriction of the credit limit of the £1,000 has been removed a few years ago, actually now more expensive bikes, electric bikes, can be included, and it becomes more appealing for a wider cohort of employees. I'm not saying everybody, there are criteria that has to be met here, but it opens it up for a wider cohort. And then the final one, which is probably the most costly one for employees, is electric vehicles. Again, maybe only a small cohort of employees to consider here for it. There is a still low benefit value, 2%. It's gone up to 3% from April, just now. And it will keep going up to 5% to 2028, but it's still a low benefit. If we can consider it, if we can consider some of the smaller vehicles that are out there in the market, but not just the big ones, but the smaller ones for a wider population of our employees, it may be something to add to the remuneration basket. From a tax exempt item, from an expense item perspective, there are a few, there aren't many. But actually, when you consider what we can do with them to stretch employees' net pay, it can make a huge impact. So home working allowance is the first I'll come to. This is where organisations can provide up to £6 per week, quite a large number when you look at it over a month. £6 per week to employees where there is an arrangement in place for them to work from home. Doesn't have to be a necessity for them to work from home, it's just an arrangement. And with the hybrid working or home working becoming increasingly common in 2020, we may now have a structure, or you, more than one organisation may have a structure here that you can take advantage of providing this allowance to your employees. Car parking at or near the place of work, very self-explanatory. Many may have car parking facilities, many may not if you're in towns and cities. With the car parking costs going up, actually this could be a welcomed benefit that to provide your employees in part or in full, whereby it can be so much more than just a cost impact. Peace of mind if people can't find parking spaces because they're so scarce, safety, traveling to and from or walking to and from car parking facilities, all plays a part in increasing the value of the benefit. Free or subsidised meals. Now, I'm sure you all provide free tea or coffee facilities for your employees. Some may stretch to fruit for free fruit Wednesdays or free fruit Fridays. But you can go further. You can actually provide full meals, lunches, dinners, etc. And as long as employees can benefit from it, don't necessarily always have to be there to have it, but can benefit from it and have the opportunity to do so, again, it can get tax and NIC free status. And the last one that I'll pick up on this is trivial benefits. Trivial benefit exemption came in a number of years ago now. And this is the provision of non-cash, it cannot be cash, non-reward or performance related items which are less than £50 in value. Hoping that some or all have heard of these. It can include vouchers, and it can be provided where all that criteria is met, free of tax and national insurance. So Neil, I'll back to you on that one.
Yeah, so there's a couple of questions I know have come through previously on some of this. So one thing is, I mean, you spoke about sort of various exempt items. So do you need full employee participation for that, or not really?
Yeah, great question. Yeah, really good question. You don't need full participation for many of those items I've just mentioned outside of the free or subsidised meals. And as I say, this is only where there is an opportunity for employees to benefit from a free or subsidised meal. It doesn't have to be that they've had it, but you can't exclude them. So if they're in an office or a facility and you exclude a population of employees for whatever reason, that means the benefit tax and NIC free doesn't apply. But if you are able to provide that, then absolutely it's available to be utilised. The others are not all employee exclusive. It's you can look at it from a cohort. Clearly, you'd want to maximise as much as you can, because they have the NIC saving or less cost of NIC associated with them.
Okay, and one other question that came in before, obviously you spoke quite a lot about salary sacrifice schemes. So one of the questions that's come in is, what are the risks associated with salary sacrifice schemes, especially when you're looking at the lower end of the employee pay scale?
Yeah, I'll let Charlie come in on the minimum wage aspects of this, because clearly it can't go, and any reduction can't go below the minimum wage. But as you get into the likes of the life insurance and the cycle to work, what you're looking at is criteria to meet the terms of the legislation and the tax and NIC free exemption here. Cycle to work on the face of it looks okay, but when you get into the criteria, particularly on a cold Wednesday evening in the winter, if the snow comes, people cycling into the office may not be their number one priority, and for us as governance may not be one for corporate responsibility. So there are areas where you need to consider for legislative purposes, but outside of that, they are open, they're free, and they're certainly something to take advantage of. Charlie, can you come in on the lower paid aspect?
Yeah, and I suppose it is a real frustration that the position on salary sacrifice and national minimum wage is that you have to look at the post salary sacrifice pay for national minimum wage compliance purposes, and obviously if you've got a large proportion of the workforce is paid pretty much at or near national minimum wage, that does prevent them from benefiting from that arrangement, particularly in relation to pension salary sacrifice. And there's a lot of benefits for both individuals and for employers on that. So that is unfortunately, that is where the the government's position on it is, and it had the opportunity to revisit this back in 2020. And despite a lot of, I would say, a lot of support for reviewing that, it didn't do so. But I would think that that is something that we would certainly encourage the government to revisit again. A number of reasons for that. I think, you know, not only in relation to the benefits of pension savings, but just simply that it at the moment is preventing the low paid from entering into a similar arrangement to those who are higher earners, and I think that is quite frustrating to have that sort of situation. But yeah, that's where we currently are with the salary sacrifice arrangement.
And just Charlie, one for you really. You know, any other things that trying to address the increase in national living wage? Any other ideas or tips that organisations should be thinking about?
Yes, I mean, the things that I was just sort of like considering as we were, and just from conversations as well with clients that we're having at the moment. I mean, one thing I would say is that what we would encourage all clients to do with their when they're undertaking national minimum wage checks, and sometimes what we do see is arrears calculations, because underpayments have arisen. So it's just making sure that arrears calculation is accurate and you're not overpaying people. We might be talking about fractional amounts here, but it's just making sure that it is only repaying what you need to pay if there has been an underpayment. And we've just seen some examples of that recently, where arrears payments are actually going quite over the amount that needs to be repaid. One practical point, which, you know, the Low Pay Commission, which sets the Low Pay Commission recommends the national living wage and national minimum wage rates every year to the government, and it goes around the country and effectively collects feedback at certain roundtable events. And there are actually, they've published their roundtables that they'll be holding over the course of this year. And again, it just might be something that if you want to contribute to that, or indeed you can contact the Low Pay Commission separately just to provide your feedback and views on how it impacts your business, and therefore what your recommendations might be. Now, that's obviously thinking forward towards the next rate change, but it's an opportunity at which to provide feedback and hopefully influence policy decision there. And I think the last point that I would be encouraging employers to be looking at would be utilizations. And I think that's looking at how you're utilizing your existing workforce and whether they are utilized in the right way. And that's, you know, when looking at the amount of overtime they might be working, or, you know, the amount of people that you have using, might be on a casual basis or just on a flexible basis, and getting the best out of the sort of structure that you've got. And we can come on to obviously some other aspects of that, but I think that's really important at this particular point when we think about what's coming down the line in the next 12 months.
Sure. Okay, so I know historically a lot of companies have used, you know, off payroll workers, self-employed contractors, etc. So I was just wondering whether, again, maybe it's one for you to start off on, Andrew. Do you think that that's a good option that companies should start thinking about again to help them save in terms of national insurance and national living wage rises?
It's a natural step, isn't it? It's a natural step to consider off payroll workers to fill either gaps or to reduce cost. Flexibility they bring, the skills, experiences that they can bring, even for the short or even longer term requirements of organisations. I think the concern around off payroll workers, there's another tribunal that HMRC won only yesterday, is HMRC have tried to tackle this for a long time. And they haven't stopped. They are continuing through tribunals. They'll take anything to a tribunal because they feel they've got the momentum. There's two aspects. One is control. The bar of control is reducing significantly, and that's over the last 2 or 3 recent tribunal cases. And the most recent one was around personal service. That was one of the major factors. So absolutely, it's something to consider. But what we need, if we're doing that, we need a policy, we need structure, we need a commercial requirement to consider bringing off payroll workers into the workforce structure. And if we want to do it for individuals to plug resource gaps, that's going to be a huge compliance risk. If we're doing it to provide specialist services, to provide technical knowledge, it is still available, but as I say, within the restrictions of commerciality and structure.
Okay. Do you think that would work for also long-term people working long-term in businesses, or is it more just if they're coming in doing a short-term project?
It absolutely can work for long term.
Okay.
It certainly can, and you know, I've looked across many long-term engagements where individuals are independent, and even where they're providing a personal service, the control aspects are significantly low, the financial risk is significantly high for them, they're not integrated into the workforce, but all aspects are pointing towards that of an off-payroll worker. But as I say, Sunil, structures need to have that from the outset. It can't be a historic look back to say, oh yeah, well, actually, let's consider this in more detail. HMRCs and the way they work is they will take a thread and pull it, and they'll pull it until the woolly jumper is all gone, and at that point they'll send you to tribunal. So you can look over the short, you can even look over the long term for certain individuals or certain businesses looking for off-payroll worker status, but it's got to be done with the commercial view.
Yeah. So do it early, get it in place, get advice on it before you implement it. Is that effectively what you're saying?
That's exactly right. Have a policy, and make sure that policy is robust. Education around those individuals within the organisation that has the authority to engage workforce.
Yeah.
So it surprises me how, for an employed individual, there are reams of approvals and sign-offs and so forth, whereas actually having a self-employed individual come in, there's maybe one or two to pass some tests. Having a robust onboarding procedure can cut out some of the headaches and pains of a revenue inspection or review in the future. Or coming on to Charlie, somebody claiming employment rights because of a fallout, generally because of a fallout.
Question for Charlie again. One of the questions that's come in before. So I think there's been quite a few questions around national living wage compliance, what the challenge is, what are the risks, what are we seeing that people are getting wrong. Can you just maybe expand on sort of the national living wage compliance part?
Yeah, sure. And I think, I mean, I suppose one of those aspects is just following on from what Andrew's just been discussing is status. Status is still an issue in relation to not actually correctly categorising your labour supply for working rights, and that does lead to breaches of national minimum wage and a failure to recognise the rules. But I think the other sort of like top three issues that we're still seeing very regularly, we've covered off one of them, is salary sacrifice. It still is an issue where it's not the post-salary sacrifice pay that's being looked at, but the post-salary sacrifice pay is not being looked at for NMW compliance purposes and not aggregating all of your salary sacrifice arrangements. But the most critical piece is the starting point, really, and what often gets missed is that NMW compliance is really around a calculation, not a rate. So not just focusing in on the rate, but actually looking at, right, the calculation is a process by which you, one, categorise your workforce. That requires a review of contracts, and if you've got that wrong, that's where we see a lot of failure to comply in relation to that area. So HMRC are very hot on that. And then it's also the other key area, particularly in healthcare, is working time. So obviously, once you've categorised your workforce, understand what the category is, you therefore know what rules apply, and then it's just establishing, well, what actually counts as working time? When are they at the disposal of the employer and under the direction and control of the employer to do something? And it's that's sort of only capturing the allocated hours under the contract or just the allocated shifts, rather than this person stayed on for this amount of time afterwards, this person worked through their break. So that is still a massive issue in relation to that kind of point around having a system which actually accurately captures time and attendance, but then also feeds it through into the payroll system to ensure that is how they are paid, or that checks are done to ensure that NMW is complied with. And I think then the sort of like the final point then is still probably then around deductions, and then the deductions that that do count towards the national minimum wage compliance check. And it might be those sort of subtle ones that that you can't see them in the payroll because they happen outside of payroll. So it might be if they've got to purchase equipment, or they've got to it's still and even though there's a lot of profile around uniform costs when it comes to national minimum wage compliance, we still see it that the uniform costs in some way are being covered by the worker or the employee, and not then being factored into the calculation, because that does reduce pay for national minimum wage compliance purposes. And they're still the most popular reasons when you look at the statistics from HMRC when they provide their sort of like account as to what they're finding as to why they're underpayments, but then also what we see when we're doing reviews and audits.
Yeah, I think I've seen from your presentation, Charlie. I mean, the calculation is actually quite complicated, isn't it?
It's not easy. it is, and I think again, one of the points that we're keen to stress, and we many of you listening today, we've got the Fair Work Agency being sort of like presented under the Employment Rights Bill, and that's going to take on the responsibility of HMRC in relation to the enforcement of national minimum wage and some other areas of labour compliance. And what we really want to see is a different approach to enforcement, something that's much more collaborative with employers, rather than basically trying to trip employers up, but actually trying to work with employers so that because most employers are trying to do the right thing, and they're trying to make sense of what are complicated rules.
Okay. Another common question that we've had come in is around, obviously in the industry there's a lot of part-time workers. As one of the questions has been, what are the main differences from a NIC and national living wage perspective? What are the key differences between, what key hurdles and pitfalls between having full-time workers and part-time workers? Anything to bring in on that, Andrew?
Yeah, so part-time workers, historically, because of the threshold being at that 9,000 level, part-time workers or shared job workers used to have, or employers used to have, the benefit of being able to pay a salary without necessarily having an NIC charge across some or all of their workforce, depending upon the way they were structured. Now, with the falling threshold for secondary NIC to the £5,000, it erodes it erodes that benefit and advantage for employers, meaning the NIC is kicking at a lower rate. So is it now more efficient to structure the workforce to a more full-time scenarios and job listings, and obviously get more there for each employee working, rather than having a part-time position for several different cohorts of employees? So that's why potentially the question has arisen. If it's not, then please say so. But the impact of part-time working now is that NIC can potentially kick in at an earlier stage. So Neil, so consideration of workforce structures should certainly be one to help that cost mitigation.
Charlie, anything from your side on that?
Yeah, it's an interesting one, isn't it? Because I think, as I mentioned at the beginning, with the NMW rates and the younger workers having a much higher increase in NMW, and this is the point that I was sort of like alluding to there, is that sort of most of those will be part-time workers, and so the cost of employing part-time workers, and there's been a lot of sort of concern raised about this, that the cost of employing part-time workers is just going to go up. And so as a consequence, is there going to be sort of like just an implied move away from that? And in effect, there's a bit of a bias there by not employing people who are part-time and only looking at full-time people who are of a certain age. And from an employment law perspective, not direct discrimination, but you can then, as a consequence, suddenly find yourself falling foul of some sort of indirect discrimination consequences. So it is a bit of a concern, and I'm, I don't know whether it's fully thought through the unintended consequence of that dropping of the threshold when you compare it to these increases in NMW rates for the younger generation. But it is, unfortunately, it does increase the risk, I think, of that sort of like discrimination aspect to the employment of part-time workers if you start to kind of like reduce your use of them.
Yeah, no, that's a good point. I never thought of that. So, and I mean, we've spoken a lot about sort of, things that can be done, can be put in place. So one of the issues that people sort of often ask is, well, actually in practice, how do we do that? So what the actual practical challenges or practical implications of actually putting some of these things in place?
I'll start on that. Absolutely. It's the number one practical issue or challenge when it comes to implementation of either a salary sacrifice or these other items that we were discussing at the top is communication. Implementing them is relatively straightforward. I mean, there's some consultation potentially with regard to salary sacrifice, but the items themselves can be straightforward.
Yeah.
It's the communication to employees about what it means, what's the benefit for them, how's it going to impact them, what's the difference between that and potentially giving pay rises. I mean, the most impactful stage here is to look at pay reviews and say, how do we bring in a collective, holistic approach to our remuneration structures, where we may not be able to give pay rises, or pay rises are going to be low, just because every cost is a challenge these days, but where we can seek to communicate a wider package, total reward in old speak, whereby you bring in every aspect of what you're providing, what you do, how you do it. What's the benefit of it? What does it mean for them? The engagement should be greater. The understanding, therefore, should be greater, and the motivational side of what you're trying to achieve, outside of giving them an extra X amount of pay, which was taxed, and their net pay is not going to be looking so rosy regardless. Actually, we'll stretch your net pay that you have. We'll give you these extra incentives, which means that you don't have to spend your money on lunches or car parking or the electricity that you're using in your home. We'll contribute towards that, and these are different ways of getting a little bit extra to your employees without necessarily having that additional national insurance charge. But communication is the absolute critical mass here, because if you don't do it right, you don't communicate it right, unfortunately sometimes these just do not land. Which is why many employers and organisations don't have 100% take up of salary sacrifice, even where the lower paid is sometimes not consideration.
Charlie. It's all a big culture mindset thing, isn't it? You're looking at a reward package rather than just your salary. So yeah. Sorry, Charlie. So anything to add?
I mean, I'd just share that point. That is so crucial in any sort of change management, or when you're trying to change cultures or mindsets, the communication, the narrative you're using, and it can't be understated what how important that messaging is and how it's delivered, because you really do want to get across what you're trying to do and what you're trying to achieve, and why it is that you're doing it, but then also to get buy into it. And it is that kind of like it's getting people to buy into what your what the scenario is and how you're trying to do your best for your workforce, but also, and then the timing as well. And I think Andrew mentioned that point as well, but the timing is critical, and it's getting the most out of a particular point in time when there is an expectation that something will happen. And it's I will look at these things also from a do we need to then change contracts, or do we need to sort of like, are there things that need to be changed in relation to the workforce structure? And it's about making sure all of these things happen. In my view anyway, I would always be pushing for things to happen at the same time, just because would be easier to achieve, rather than kind of like doing one thing and then knowing that there's something else coming along that will also create some sort of like change. But sometimes that can't be avoided by it. That's why I always try to encourage clients just to sort of like try and bring those things together, but to focus not just on the legal compliance aspects, but the communication, the narrative, and the timing.
Right. I'm just conscious of time. So Before I hand back to Fraser to see if there's any questions that have come in, I just want to ask one more question to the panel. With a little bit of crystal ball gazing here, what do you think is coming down the line? Obviously, we've got the budget coming up, in a few months' time, and there's a lot of talk about what's going to be happening. Any thoughts on where the direction of travel is going to be with the government in these areas? Andrew, one for you maybe to start off with.
Yeah, it is a definite crystal ball here, because we don't know. I mean, look at the global stage at the moment with everything going on with tariffs and so forth, and the market. But yesterday, Keir Starmer said that he will not be raising taxes. He will not be raising NIC or VAT. I mean, that's part of his manifesto, and we know that's been stretched, no doubt, with the employer NIC increase. We understand that. He has said he'll be looking at reduced spending and increased borrowing. That's going to have a knock-on effect anyway. But there are a couple of things. One is positive, I suppose, and I'll bring Charlie in on this a bit more, because I'm going to be talking slightly out of my specialism. But they could be listening to the think tanks, and they could remove the national minimum wage non-compliance impact salary sacrifice arrangements. That would be seen as a huge welcome boost, particularly around pension contributions, but all aspects of it would go really, really far. Yes, it will increase savings because it will bring in populations, but really it will give a really big tick to we care about working people, and whatever the definition of that is. On the flip side, and I know we've been talking about salary sacrifice, particularly pensions, but what was mooted before the last budget in autumn was including NIC employer on pension contributions, and also potentially removing pension tax relief for those higher paid individuals. That could happen, but it is going to be a big but.
Yeah.
Employee pensions are so emotive. All the changes that have happened over the last 20-30 years is such an emotive issue. I think any advisor to the government would just be saying, let's give that a wide berth and let's go somewhere else. It isn't something viable for me, but as I said, it was mooted, it was in the press, and I think it was a smokescreen for the threshold reduction, but there's always a potential.
Okay. Charlie, anything to add on that?
Yeah, I think, well, I probably was sort of looking at more of what's coming down the line with the employment rights bill. I think Andrew's covered off obviously what he anticipates with the budget. I do agree with him with his views on that. I think the other thing that an employer's mind will be what's happening with the employment rights bill, and just the concern about the lack of I suppose clarity we've got about some of the aspects of the bill. And I think the most I would focus on obviously the day one unfair dismissal right proposals, and then also in relation to the use of casual workers and this right to guaranteed hours of work. And I think what my concern is whether we'll get enough clarity before the bill becomes passed as an act. I'm pretty confident it will become an act. But what I would like to see is certainly more engagement and understanding of how those provisions are going to impact businesses, and some more certainty and giving some more comfort as to how, particularly I think around the balance of flexible working. I do think there needs to be, I get the sort of like the reasons as to why there are these provisions being introduced, and I get some of the concerns, but there does need to be that recognition that actually there are two parts to that, and it's not only employers that also are looking for that flexibility, but there are a lot of people who want that flexibility too. And I think if they need to create a system that's going to work for everyone and provides much more certainty than what is currently being proposed. So I suppose crystal ball gazing, that is, I think it's coming. And it will be coming probably in the summer in terms of the act, but I'm hoping we're going to get more engagement with business in relation to its impact and giving us more certainty.
Great. So can I just thank Andrew and Charlie for their time today and sharing their thoughts and ideas. So if anybody does want to continue the conversation with them, please do feel free to sort of contact them directly. As Fraser said earlier, we will be sending out summary notes from today in the next sort of 24, 48 hours. We'll make sure we've got Andrew's and Charlie's contact details on there. So please feel free to sort of go back to them if you've got any queries or need some further support. Fraser, can I hand over back to you in case there's been any questions through the chat or on email?
Yes, can, Steve. And just before I jump into them, I just want to reiterate those thanks, Andrew, Charlie. I think it's been really, really insightful, and this is something that a lot of providers are going to need to be aware of and be mindful of. You know, the changes came into place on Sunday, and it leaves a lot of people in the position of not knowing what the next steps are. So I think having these conversations, understanding these solutions in a very candid way, but also not in an entirely negative way, looking at the possibilities and the hope that there is still there, is something that's very much needed. So thank you for sharing your expertise. I've had one question through email, which I'll ask, but then I've also got another one just from my end as well. So I'll ask the question from the member first. And they've said, employment allowance has been mentioned as being increased in this year. However, we are a local government funded company and have never been able to claim the employment allowance. Is this still the case? Yeah. And then to follow on from that, are the rules still for one claim per group of companies?
Yeah, great question, and unfortunately you are right in terms of for local government, depending upon your funding structure, we can take that offline if necessary, but it is only one claim per connected companies in a group. So if you have more than one company in a group, only one of those companies can claim it, and it isn't distributable like the apprenticeship levy, for example. Only one of the companies within that group can claim.
Thank you, Andrew. And the question I wanted to ask goes to both yourself and Charlie, which is, if you could summarize it in a short sentence, the one key takeaway that you would like the people listening to this session today to leave this call with, what advice would that be? What topic or area would you ask them to consider, look at, review, anything else like that?
I'll go first on this one, Charlie. I would say a takeaway for me is look to see how we can stretch employees' net pay by utilising tax and NIC exempt items.
Thank you, Andrew. Charlie, do you have anything?
I mean, my immediate sort of takeaway would be utilisation. I think utilisation and just making sure that your workforce is properly utilised, so that you're effectively getting the most out of what you currently have. That would be my key takeaway.
Thank you both. There's been a couple of comments in the chat there. So one from Anne-Marie, which is that contracts could be amended to make salary sacrifice pension as a default, offering the employee the option to opt out of the salary sacrifice. So that's just kind of a bit of feedback. I'm not sure if you have any comments on that or anything else. There's not really a question though. But just looking to the audience, we do have 11 minutes left. So are there any other questions that members of the call would like to ask?
Sure. I was just going to pick up on that point, which is it does look like a comment, but I think, I mean, obviously the key thing, and if Andrew might comment on this, from for a genuine salary sacrifice arrangement, yes, there does need to be an agreement between the employee and the employer that they are varying their contract of employment to enter into the salary sacrifice arrangement. And we do see that effectively there is a sort of like an approach to automatically opt employees into a salary sacrifice arrangement, which does get you the maximum kind of buy into that arrangement. But the two things I would say from my perspective, from a legal perspective, would be, one, you've got to be very transparent about that with the employee in the way in which you communicate to them. But you do need to have the necessary processes and controls in place to ensure that if you are doing that across the board, then you're not doing it for those who that would breach national minimum wage, because that's the risk there. Is if everyone is in from the outset, it's those then who are paid at national minimum wage rates or near that who wouldn't be able to take part in it unless you're going to top up their pay above NMW rates.
Yeah, that's exactly the way I was looking at it. I mean, that can be structured in a way whereby you're looking at a value of salary to say anybody below X we won't include, but the rest can be. Again, you need to take into account all of the information in order to make sure that that can be viable before implementation.
Thank you both. We've had another question come through into the chat, which is, which areas have you seen HMRC focus on as a point of inquiry within employment tax, and especially within our sector?
Yeah, so travel and whether permanent workplace is consideration for more than one workplace, depending upon the scenarios. That is for the sector, for yourselves, but also across the board. Off-payroll workers we've already mentioned, just generally. Not necessarily impacting you, but it can do on a transfer of debt, depending if you utilise agency workers, how you utilise them, whether you are in control of the supply chain, whether the supply chain itself is operating pay as you earn as it should do, and if not, does that then trickle down to become a risk and cost for your organisations? So I would say that those are probably the three areas of most risk for your sector.
Thank you, Andrew. I haven't received any further questions, so I'll look to make one last call to the audience. However, as always, if you watch the recording again and want to ask, have a follow-up question or anything else like that, the contact details of those presenting today will be shared, so you can have a follow-up conversation with them, and maybe if there's something more nuanced that you would like to discuss, you'll also be able to reach out to them there as well.
Can I just add one thing? Sorry, if anybody wants to, if anybody wants to receive more information about what we're doing across our healthcare industry, it will include things like, you know, employee tax issues and other issues around healthcare. People can go on our website and go into the preferences centre and opt in to receive information by clicking healthcare. So please do feel free to do that, and you'll automatically get emailed our ongoing publications and insights.
Excellent. Thank you, Sunil. Well, as there's no other further questions, I look we can to draw the session to a close. Oh no, just last one in there. Can you please explain the issue just raised about the use of agency workers, and if we should check the agencies are applying pay as you earn correctly?
Yeah, Mike, I think it's Mike. That's exactly the point that I just made there. So HMRC, there's an umbrella company consultation that's going to happen. That was came out of the last budget as well. But more importantly, is, are your agencies operating pay as you earn accurately on the workforce that you are gaining from them, either off payroll, on payroll, etc. There are agency legislation that dictates that. Are they utilising other agencies and not necessarily just their own? And how are they keeping track on it? So a supply chain audit is absolutely something that I would recommend to make sure that pay as you earn is being operated accurately on payments.
Thank you, Andrew. Are there any other questions, or?
Just think if it is of interest, I was just going to put in the chat as well, just a link to the Low Pay Commission's roundtable events they've got going around the country, and also their contact if anyone does want to reach out and provide their feedback in relation to rates of NMW for 2026. So I'll just pop that in there.
Yeah, that'd be perfect, Charlie. And as always, we always provide a response to the Low Pay Commission and are a part of the different regional events and national consultation responses. So if any other members would like to work on Care England's representation as well, just on a separate note, please do reach out to myself or join our workforce development group chats, which are a monthly special interest group meeting. And that's where we have those discussions. But without further ado, thank you everyone for attending today's session. And I'd like to thank the speakers again for all of their information that they've been sharing, all their expertise. Just to remind everyone, we'll be sharing a recording of this session along with some wrap-up notes and some links to some of the different documents and everything we've referred to today in a follow-up email within 24 to 48 hours. Thank you all, and I hope you have a lovely rest of your day.
Excellent. Good.
Thanks.
Cheers all. Thank you.
Bye.